Welcome back, traders. In today's session, we are diving deep into one of the most powerful concepts in price action, which is supply and demand zones. These zones are the backbone of market structures, showing us exactly where big players are, they set up to buy or sell. I'll break it down in few steps: how to identify strong zones and how to differentiate between fresh and tested levels, and how to use them for precise entries and exit. We'll also look at common mistakes traders make and how to avoid them. And here is the exciting part. Stick with me until the end of the video because I'll give you a special indicator that automatically marks out the supply and demand zones for you. This tool saves your hours of charting and makes your analysis much sharper. Starting off with supply and demand zones. These are a professional trader's guide to identify institutional orders, order block, timing, high probability entries, and reading the market through the lens of buyer-seller imbalance. So, let's start with what are supply and demands. Supply zone. Supply zone is a zone where there are more number of sellers. There's a strong selling pressure in that zone. So it is overwhelmed by buyers, causing sharp drop. Institutions left unfilled sell orders here at that price range. And it makes it further a future resistance. In the future, it's going to act as a resistance as well. Whereas demand zone, it is a place where there is a very strong buying pressure, previously overwhelmed sellers, causing a sharp rally. Institutions left unfilled buy orders here, making it a support region in the future. These zones reflect where institutions entered and where they are likely to re-enter. Now, the main question everyone is having is how to identify a supply zone. Now, instead of reading, let's check out a trend. This is a bullish trend. Bullish trend makes continuous higher highs and higher lows. Now, let's imagine market has come below this higher low and again come back to the same level of this higher low. So now this higher low region starts acting as a demand zone. It has so many buy orders, and again when market goes up and the next time when it taps here, you should be ready for placing longs and with stop loss below. So it is pretty simple. In an uptrend, when a higher low is broken and it comes back to the higher low level, that level starts acting as a very strong demand zone. Now, key characteristics. How to identify supply zones. So supply zones are pretty opposite of this. They are like resistances. Now, how to identify supply zones? Sharp price drop from an area. Like you see, markets were giving small candles, and from one area suddenly start giving big sell side red candles. So that starts acting as a supply zone. This region, which is already a resistance with big candle outcomes as soon as market touches that region, starts acting as a supply zone. Now, what kind of candles are formed here? Long bearish candles with minimal wick on the top, and it is multiply tested and rejected at the same level. Markets more than 2 times have come to the same level and fallen back again. So then this starts acting as a supply zone. And break of structure follows by the zone. Break of structure is exactly what I just told you in here. In a downtrend, if it goes above the previous high, this zone starts acting as a demand or supply zone. When market again comes back here, this starts acting as a supply zone, and you can start selling from this zone after the market gives a retest onto this zone. I'll show you the real market examples and then it will be much clearer. Now, how to identify demand zones. This was about supply zones. How to identify demand zone. Supply zone, it's a rectangular zone. You see a big drop, base drop, price retests, you see a good rejection wick, and yeah, after the retest you enter. Now, how to identify demand zones. Demand zones is basically sharp price rally away from the zone, strong buyers in control. It is a zone from where there are multiple buyers or institutional pending orders sitting here. As soon as price reaches this level, institutional orders are triggered and you find a very strong upward move. It is a long bullish candle with minimal wick on top, and multiple bounces of the same level is a very good sign, and a break of structure as well, like which I already told you. In an uptrend, when it goes below the previous low, This is what a break of structure is. But don't worry, the indicator which I give you at last is going to mark out break of structure, change of character, and the demand and supply zones for you. Now, how to find zones? Okay, so first, to find zones, first you should see where orders are there, and you should see from which zone, like, find a zone. Next, make sure that there are sharp moves from that zone. Next, make sure it gives a retracement, and make sure that retracement, after the retracement, it gives a very strong upward candle, a spike, and thus you enter. Imbalance candle, base candle, and break of structure, these three are very good signs. Imbalance candle is a large body, small wick signal, aggressive institutionals participation. Next is base candle. It is consolidation before explosive moves, markets the zone boundary. Next is break of structure. Next, it confirms the zone valid price must break the prior high or low. Next, a fresh zone versus a tested zone. A fresh zone, it has the price has never returned to this zone. Institutional orders are remaining fully intact. There is a zone where price has gone up but never returned to this zone. Here many pending institutional orders are there, and as soon as the first touch comes, you can expect a very strong pull up. So this is what is called as a very good demand zone actually. Next, what is a tested zone? And if there is a zone, imagine there is a zone where the market has tested multiple times. So the chances of you winning the trade in this zone is much less compared to this zone. So next time you ever mark a demand zone, make sure it is being tested less number of times. The less number of times it's tested, the better the zone is. Rule: after 3 tests, some zones are exhausted and fade away. So if you see a zone which is tested more than 3 times, ignore that zone. That zone does not act as a supply or a demand zone further. First thing, now entry strategy using this zone. Now I'll give you multiple strategies. First thing is, you identify the zone, wait for confirmation and enter the trade. But now, if you combine it with some bullish confirmation candle at the demand zone, and a bearish confirmation candle at the supply zone, stop loss above the zone, here stop loss below the zone, and then target a 1:2 risk reward, this will be an A++ setup for you. Now what to do is, if you people didn't like that strategy, here are a few multiple strategies which you can build on your own using this. First thing is trend line plus supply and demand zone. Second thing is Fibonacci plus supply and demand zone. Third thing is moving average plus supply and demand zone. And if you have doubt about trend line, Fibonacci and moving average, I already uploaded a very small video on this, like 10 to 15 minutes or sometimes less than 10 minutes. You can watch that video out. It's gonna help you a lot. So you can combine those 2 videos. See, these are 3 different strategies. So choose one strategy. Next, combine my both videos topics and make your own strategy. And you can easily start trading according to supply and demand zone plus that. So it is a double confirmation. Now next thing, most common mistakes we see is trading weak zones. Sometimes you see near this higher high, higher low when broken, sometimes it is very weakly broken. Sometimes only the wick goes down. So these zones are called as weak zones. So we should not trade in such zones. Second thing is ignoring higher time frame. Now you see this break pattern happens in all the higher time frames and lower time frames as well. First thing is 4 hour, 1 day, 1 hour, or you can go higher and lower as well. So now don't ignore the higher time frames. In a higher time frame, if support or demand zone is there and it's getting tapped, you can go on to the lower time frame and then enter to get more returns, or to get a good risk reward as well. Now entering without confirmation, do not enter without confirmation. At least wait for a strong engulfing candle or inverted hammer or such candles. If you have doubt on these candles, what are confirmation candles, you'll find link in my description, or you can find it at the end of the video as well. Go check that out. Next, putting it all together. First thing is, market higher time frame zones first. Go to daily or weekly and then get down to lower time frame. Start from higher time frame and then get down to lower time frame. Next, keep marking the supply and demand zones from all the time frames. Wait for price to return. Once you have marked out a zone, wait for price to return to that zone. Don't early enter before or after the price has given a good move. Don't enter. Never chase the price. Look for a confirmation, confirmation like a trend line, Fibonacci, or exponential moving average, EMA confirmation. Next, execute the defined risk. Take a minimum of 1 is to 2 risk reward. Don't go below that. And now, the most awaited thing. So, the most important thing was, which you all have been waiting, the indicator thing. Go on to your TradingView indicators column and type smart money concept. So you're going to get the first indicator, smart money concept, SMC by Lux Algo. Just apply this indicator and then automatically you're going to see break of structures, BOS, change of character, CHOCH. Everything is already applied onto your chart. And this is working on all different time frames. Now let's check why it works. You see here, after this zone is tapped, look at the pullback. Look at this long institutional candle play here. So this is a very good sign that this is a demand zone. The next time market taps here, you can enter longs, placing your stop loss below this. And once the zone is tapped or once the zone is tested, the indicator automatically removes it. So you cannot see any previous zones because they're all tested. And the ones which you see, this is a supply zone. The skin or pink color one is a supply zone and the blue one is a demand zone. Once market taps here, you can enter a very good trade. You have multiple supply zones here. So placing your stop loss here, you get a very tight and small stop loss of 28 pips. And you can easily aim for 1 is to 2 to 1 is to 3 risk reward once the supply zones are tapped. Generally, you can easily go for 1 is to 3 risk reward. So yeah, this was for the indicator. It works on all time frames. And yeah, that's it for this video. If you have any sorts of doubt, you can ask me in the comment section or you can message me on my Instagram. Link is in my description. I'll answer all of you. That's it. Thank you. Happy trading.